Harbor One Mortgage.
Yes, still. Yeah, very good. Good stuff.
How are you doing, John? How was your weekend?
Weekend's awesome. That's the time you get to catch up and really think through whatever options there might be. You know what I mean? Like things you want to catch up on. So it's all good.
So what kind of things happen over there at the Rondi house on a weekend? Do you have like a yard and like I saw you were sunning, but yesterday was horrible out. So
it was fun. What? Oh, there we go. Okay. No, I just had another message pop up on my screen when you were talking. So anyway.
Because you're very popular.
No, well, no, a Zoom message. So I don't know if that's contributed to why I was muted before. But anyway, no, it's all good. Just that's what you do on the weekend. You gotta find, the time to unwind it a little bit, and so we find the time. It's all good.
Are you reading anything, or listening to anything, or is there like subscription that you go to kind of fill, or is it CNN, or what is it for you? Daily check-in.
For me, I don't have to go anywhere. My emails get flooded with news clips and articles and guideline changes, and so honestly, it's just that kind of a world. And so it's ever changing, and we know the difficulties. We've talked about them before. There's the most recent for me, that's I guess what I would say, I'm going to wait to see how it plays itself out, are things we've talked about before, and that's the differences again between bank and broker. And I know I keep saying that.
Sure, it's very important right now.
A lot more buyback and warehouse lines. People that have warehouse lines that are brokers are going to be challenged because they're not going to be in a position to sell, and they're going to be forced, meaning sell their loans. They're going to be forced to make a decision whether to hold it for the time being until it does fit into some of the guideline changes that Fannie and Freddie Mac have presented to all of us. So, other than that, it's just business trying to be what we would say as usual and to the norm.
Well, talk to us about what kind of pattern are you seeing? Or have you completely slowed down? Are you still seeing new applications come in?
Right.
Like this week, did you have some new people come on board? Or
there's the people that we're trying to bring on board are processors, right? So fulfillment people and support staff. That's for us who we're trying to fill the gaps with. Our processors, their pipelines have grown to, in some extent, 150% more than where they were, 45 days ago.
Wow.
Our loan officers are experiencing pipeline growth of 200 to 300%. So,
wow.
To answer your question, those are real numbers. And so to answer or address that, we haven't slowed down. We've just, if you measure it to where we were, it's not a slowdown, right? If you measure it to where you were maybe 2 weeks ago at its peak, okay, sure. But it's not relative if you say, I was up 300% in originations and now I'm up to 225%. Well, you're still cranking.
And the bulk of this business that you're up by, is it traditional sales, or are we still talking refi, cash outs?
What I personally experienced is I'm starting to see the activity with regards to the people I have in approval in my approval pipeline. I'm starting to see that activity to be re-engaged a bit more, where they're texting me, they're calling me. They're not ready to run out tomorrow and go, do the virtual tour and open house, because one gentleman I talked to over the weekend was just like, how am I buying a house unless I can go in it, John? I'm not buying it until I can go in it. So I get it. So, in some of that, that's an opportunity for me to coach them through it, because specifically it's with one of our partners here at KW, right? So they referred this borrower to me. I've been working with them for months. The rubber hit the road, things stopped. And now I'm re-engaged with him, and I'm certain that the realtor that referred it to me through KW has not talked to them. And I know that for a fact because, we had this specific conversation. So what my role is in this is to keep some momentum. And the truly the sincere part is when he's ready, yeah, it's going to come together, but I want to remind them that there's still plenty of ways to get intimate, even though it's not the way we used to do it, where you go into, the house and touch and feel
Yeah.
it all.
Hmm.
So it's just that, work, give and take back and forth, and just a continual drip, and making certain that if for no other reason, our dialogue is open, right?
Yeah, people are home and they want to talk about their dreams. So there's definitely an opportunity for people to be cultivating business, maybe not in writing contracts, but in relationship building.
Yeah,
for sure.
yeah, this is it. This is where your skills of a professional, whether it be mortgage or real estate, realtor, this is where your skills shine through. Are you able to engage and have those interactions and find new ways of doing it, or not?
Yeah,
Have
and
you been talking to clients on Zoom or mostly over the phone? Have you been being creative with the conversations you're having with people?
Yeah. Well, I don't think clients don't want to go on Zoom. They don't want me coming into their room, or they'll talk to me. They'll text me. Most of it is text, to be quite candid, which I don't find to be ideal. But if that's what they're comfortable with, fine. I happen to, again, I happen to have a resource and a tool in my mobile app that I keep pressing and professing that everyone, especially at KW, needs to get on, because I'll get reminders that someone this past weekend notifications, I should say, that someone this weekend just went on my app and did a calculation. Okay. Now that tells me that that person is thinking about the purchase. It tells me that they're still active. They're still active.
What tool are you talking about? What tool?
My mobile app has functions on it. I don't know if you can see this or not.
And how do you download the mobile app?
That's the mobile app.
Okay.
Okay, great.
Okay.
How do we get to it?
Well, I've shared this with everybody in the office, but for those who have become partners, and there's a host of people that should look familiar here.
Mm-hmm.
Okay.
Yes.
They're most, if not all of them, are KW people. And so prosperity people specifically. So when they utilize this tool, which is a calculator, and I didn't plan to do this today, but this is a calculating tool. Okay. It's right on my app. They can play around and just see what, the price point might be with the taxes and so on.
And listen, this is something that you bring to this call and share with everybody. So how would somebody, even if somebody's watching and they're not in KW, how would they find the John Rondi app?
Well, they have to text me.
Okay.
Call me. If you don't know my number, I don't know. Maybe I don't know how to get my number to people if they.
What is it? Give it to me right now.
Well, I have to be. I don't know. This is live. Everyone could have my number now. How do I handle that?
Oh my God. I'm going to get Shiny in here next week. I need Shiny. Shiny will give her number out.
She's got personality. No, you want me to tell my number? It's 201. Writing this down? All right, 201 563 3794. So that's my cell number. Anyone out there that wants the mobile app, text me. I'll share it with you. I'll assign you as a partner. If you're not a realtor and you're a consumer, great. I'll give you the app. You download it. You share with me your intimate details. And then in return, you will get access to the mobile app. We can then have some interactive dialogue and kind of work it further from there.
Shiny on Facebook said, "Give them your number, John."
Well, so again, if that's one of the things that, again, I really I can't profess to having to leverage more than any other tool that we have right now. The mobile app is pretty popular. One other thing that I'll share with you guys. Well,
because it allows people to go ahead and do their own research without really having that commitment, even though they're inside of our tools. We're giving them access to kind of have an insight as to what that monthly cost would be, right? With the rate, and what is the going rate right now?
Well, rates are in the low threes. Yeah, no, 3.25. You can get probably lower than that if your credit score is over 800. So rates are fine. Rates are
over 800. How big can your credit score be?
I've seen them, well over 800. I mean, it's not common, sure. Yeah, wow. It's not common. I don't even know what the high end score might be. I've seen them at 830, 820. I mean, there's, anything as you're encroaching on 800 is going to get you the absolute best. And then by standards, lending standards today, that benchmark has gone up. Some of it is self-imposed overlay from banks that say, or brokers that have no choice but to lend at a 700 FICO score. Others have set the minimum at 680. There's a lot of lenders now that have, again, we talked about that, made them. It'll balance itself. It'll balance itself back through. So.
Do you remember that? Remember the 580 fast and easy?
Oh yeah, sure. Yeah, remember that. Yeah.
Back in the days.
Yeah, back pre real estate bubble days, right?
Yeah,
which
that's right.
contributed to it. Yep.
Exactly. So let me ask you, what do you foresee out of this right now? I mean, I know you watch the stock market. That's why I'm asking more on the economic side of it, not necessarily what are the mortgage rates going to be, what are the prices going to be. Just asking you because of your experience.
Yeah.
What have you been looking at?
So, I can't help but dumb this down and make it simple. And the reason I say that is we're all subjected to information overload. There's so many people out there that think and profess to know what's going to happen, that we fall, in line with some of that. So you listen to anyone who's of expert opinion, they're just speculating, they're hedging, they're guessing. And truth be told, I'll rewind again, as I've done, and think about the years before this current situation, and know that there's really only one thing that you can say works, and that's putting your head down and staying the course of whatever your own personal business model might be. When you withstand that and you stay your course of direction, you'll come out of it sooner versus the others that think someone's already predetermined what's going to happen. So it's with that in mind that, what's going on in the stock market, all I know is I get my monthly statements like everyone else does. I don't even open them because it's going to be in a negative. What value that gives to me personally is zero. So I don't need to go backwards and see and get frustrated with that. What I'd rather focus and put my energy towards are things like this, things that we're doing here, things like following up with my clients and working with those realtors who are comfortable trying new things like the Zoom calls, like the virtual open houses, and connecting some of those dots. This economic, segment or overview of what it's gonna be, we are gonna come out of this better in 6 to 8 months. That's a fact. There are so many people that are chomping at the bit that are just waiting. We know they're waiting, right? You have them, we all know who they are. They're waiting, and as soon as they can get back out and the band's lifted, they're gonna run. They're gonna guess what? You should probably all fill your tanks up with gas now, because if you don't, and then you think the band gets lifted, you're gonna get online and go get a tank full of gas, you're gonna be surprised how many people didn't get, right? Those kind of small things that you wanna be prepared for. And it's kind of symbolic to, again, where we currently are and where we need to be. If you don't have gas in your tank, you're not ready to go anywhere. So go fill it up and let it sit in your driveway. And then when you're ready to roll and you want to take your family away for a weekend somewhere, you can go without any, hitches. So I don't know if that helped explain you.
Yeah, no, I'm just wondering what your perspective of things are.
All right.
My concern, we just have concerns here of this is like getting to be the new norm. The kids are definitely not going back to school. I mean, that just can't really be the case. Right. All the kids are pretty much passing and going on to the next grade. And so I think that, like, looking at the next year or 2 years, we have some repair that we're going to be new initiatives, the post-COVID initiatives that happened, but throughout the whole situation, I'm looking at both of our industry. Well, we're connected, but the mortgage opportunity as far as a career and the real estate opportunity. We're two of the industries that are still going to happen regardless of what the times, what's happening in the times.
Exactly.
Right.
Yeah.
So how does somebody, just out of curiosity, how would someone start a mortgage career if they thought maybe something they'd be good at? right now?
201-563-3794. Now I'm going to give my number out every 10
John, I already
minutes.
posted it on Facebook. I typed it out, so it's
Everybody knows it now.
everywhere. The secret's out of the
We-
bag.
We get a 10%. We get a royalty
You
on
got
the
it. Why not? Yeah. We'll whack it up. What, Matt, what's she got in that
Rondi
glass?
royalty.
What's she got in that glass? I think she's confusing this for a Friday happy hour Zoom. I'm not positive, but.
No, but seriously, just real quick, what's that process? Matt and I are hosting on Wednesday career hour so that they can see, what it looks like to get into the business. But what does that look like? It's kind of similar to us.
It really starts with a phone call, right? It starts with a conversation. So if someone says they're interested in getting into this business, we have to have a very engaging, robust conversation, because if you can't sell yourself to me brand new, then, who are we kidding? You need to have something other than your traditional skills, which is, I like people, or I sold something in the past. Well, that's great, but the past doesn't equal the future. We're in a whole different place. And with that in mind, if someone says they want to get in this business, all right, let's have a conversation, and I'll do what I do in my own way of kind of navigating if this is the right kind of person. I'll challenge somebody to a real simple task. And if they succeed at the task, they'll call me back. If they don't, I know that was the right decision in me pushing them to try to do something they weren't comfortable doing, because then they don't call me back. So with all that in mind, it's a conversation that we have to start with,
What attracted you to the mortgage industry when you started out? I know you've been in the industry for a while, but what was it that drove you into getting into the industry?
Well, at the time, it was 1991. In 1991, I was making $25,000 a year. I think that was enough of a motivation to try to see if I could do better. And so I was looking just for.
Well, were you a kid or were you?
No, I was 20. Well, what was I? I don't even know. 91. I'm 54. I was 25 years old, something like that, right?
Okay.
So no, it's real simple. What attracted me is just the challenge of sales, of a sales culture, and I wanted to do better. I wanted to make a better, life for myself and for my then wife and my newborn child. So yeah, it must have been 25 years ago. So that's the reality of it.
Well, and I like that, because right now in the MREA series, we were just talking about the 9 ways an MREA thinks, and one of the most important ones is think powered by a big why. So it seems like when you got in the industry, that big why was your newborn and wife.
Yeah. Oh yeah. Motivation. Debt has an incredible way of motivating. And, back when the decision for me in my personal situation, having been married, having a newborn, and having a new house, all the things that that you could pile on top, there was a crossroad. So personally, again, I was with a company, a big Fortune 500, Colgate-Palmolive, big company, making a great salary at the time, I thought, having all the bells and whistles that go with it, 401k, profit sharing, expense account, benefits. And I was in a brand new house that we had put together, we built from the ground up. And I knew that there was still something better out there. And so with that in mind, I had an opportunity in speaking with a friend of mine who was in the business. And the short of all of it just became that you have to take a chance. The guy that never took a chance never had a chance. And so I knew the most profound moment of going forward for me then was when I had to turn in my company car. And anyone who's had a company car that pays for gas, pays for insurance, pays for everything, knows that's, I don't even know how you put a value on that, right? That's emotionally sometimes just as much as it is financially pretty special to have that. And so when I had to turn that in and had to go lease a new car, I was like, okay, now there's no turning back. So the debt was the motivation for me. And then I loved then real quickly into learning what it was about to be in the mortgage industry. And from there, we just steamrolled through. So life never changed.
Awesome.
It's all good.
And the rest is history, right?
Yeah, we're rewriting history.
We're still making it, right?
We're rewriting history. Here, I feel like, it could be day one in the mortgage business for me. And I mean, I have 30 years experience.
Yeah.
There's so many changes that's just the reality of where it is. And so we've got to embrace it and not fight it. And there's a lot of people that are fighting it now and don't understand why there's so many moving parts, and why they can't do a certain loan. There's loans that you won't be able to write today that 2 weeks ago you could write. It's just, that's how it changed. The program's gone. We just personally had another change on a refinance. The equity position is now different. Today, you need 30% equity versus a week ago, it was, 20% equity. That's a guideline change. That's not our overlay.
Is there a condition on that, or is that across?
No, it's in a certain space. It's a cash out refinance. So people who want to cash out, who once could go up to an 80 loan to value, you can't do it anymore. Actually, I think tomorrow's the first day that anything that we do that will be affected and be minimized. So there's people out there thinking, oh, I'm going to wait for rates to come down, and I'm going to pull out all this cash. Well, okay, you can wait for rates to come down, but now you just shorten the parameters from which you can borrow on your house, because that market segment is different. And I told this to you guys probably now going on a month ago, when Wells Fargo said no more cash out refinances. That sets the tone, and the market follows. And so here we are making an adjustment, but everyone has to handle their business a little differently, and so that's what we're doing right now. All right.
Well, that's something new.
Yeah, I was gonna say, John, we just have a couple minutes left. If you want to give any final thoughts or final statements that you want to get out to our audience today.
No, I'm good. I'm glad we have a chance to do this. It allows us to obviously engage, and It's good to hear your voices, and at least once a week. How'd you guys do on Saturday? Didn't you have a call on Saturday? Big with Ronnie and everybody? What was that about?
Oh no, that was Legacy Minded Men. That's his church group.
Oh, I didn't know that.
It's a Christian men's group, Legacy Minded Men. It's an amazing group. Yeah.
Oh, I couldn't get on. I had to do a drive-by birthday at 12 o'clock.
Yes, we had 3 of those this week. Yeah. Although I have to say, I was not all for it. I was like, this is so stupid. I'm going to drive by this kid and be like, hey, birthday. Yeah. And then when I got out there and we're with so many of our loved ones, I started tearing up. I was like, wow. Yeah. Like anything to get us out of the house and then to come celebrate this little boy.
Yeah. I did one on Friday and did one on Saturday. And it just is, it's interesting how, I mean, in this case, it was a 5-year-old. It was just great. She was so happy.
Yeah.
So all good.
Who thought we would have been talking about drive-by birthday, 5-year-old birthdays, right?
Well, now
from John Rondi, excitement on the weekend.
But you know what the profound thing is, and you believe in this, the universe, what you throw out, you get back in. We now have a new identification with the word drive-by. So drive-by has now forever changed in my mind. And I hope in the rest of the world, maybe subliminally, maybe that's changed for a lot of us. Yeah, indefinitely. That would be refreshing, right? That would be nice.
That would be lemonade.
Right. Yeah.
So it's the new drive-by. Good.
On that note. Yep. All right. Have a fabulous week. Thank you.
All right, guys.
See you next Monday.
Yep. Okay. All right. See you guys. Bye. See you guys.